Welcome back to my channel. So today's video is going to be me showing y'all a walkthrough of a trade. So I'm going to go ahead and flip the camera and show y'all now. Let's dive in. Okay, so y'all see I have QQQ pulled up here on the chart, and I am actually on the 2-minute time frame. Y'all know I love to trade off the 2 minutes. And of course, I don't have any indicators pulled up on my chart unless y'all consider volume an indicator. Some people do, some people don't. But for the most part, y'all can see here it's a bear chart aside from these price levels that I already have pre-marked. And this is going to be the baseline that I use for this trade. Now, obviously, I'm analyzing pre-market anytime I go into any specific trade that I'm taking, especially at the start of the market open. So with that being said, it's always important to analyze what you see happening behind the scenes. Now, I am on Central Standard Time, so the market opens for me at 8:30, y'all can see here. And essentially what I did was, again, I already was looking for any specific like continuations or reversal signals. And I always make sure I analyze to see what exactly is taking place. So clearly we can see that this candle at this specific range here, we can see that it had a very, very strong and long body. This candle was then followed by another bullish candle, and then there was a set of some bearish momentum here as well. Okay, so essentially, again, this is kind of like behind the scenes. You have to know what you're looking for here. Now, when it comes to actually analyzing the market, I was going based upon what I saw as far as the rejections. They actually formed a pattern. So you can see clearly here, this formed the flag pole. We can see the rejection, flag pole, rejection. Y'all can pretty much see the pattern. And again, the stock market is very, very repetitive. So if you know what you're looking for, I was just anticipating it. So in this case, it actually played out really well, I'll say. The start of the market, we saw the rejection. And again, this is going to form essentially the first part, which is the bear flag is going to always have that essential sell-off. Then we're going to see the channel formation. Now, this was obviously a level of resistance at the price level of 616.45. That level of resistance to me was respected. Although the candle did close above the level, it wasn't enough for me to say that this would actually continue into an uptrend, simply because the next candle, 2 minutes right thereafter, was this bearish candle with this long bottom wick. Again, that's telling us some selling pressure took place, but it's a little bit of an indifference because we can also see the upper wick of this candle here. It's almost extended to the same amount as the bottom wick. Okay, so very particular on how you choose to analyze, but again, I look at the anatomy of a candle. With that being said, this bearish candle also had some activity above the 616.45 price level, but again, it wasn't enough to get to the 617.02. So again, that's another green flag for me because it let me know that what I'm anticipating may actually take place. So for me, once I took a look at the market, I continued to be patient. That's the main thing that you should always do, is remain patient within any trade you take, simply because if you rush it, it could clearly go left. So in this case, I had the first signal, first clue based upon pre-market. Then I'm analyzing the channel to see if it's going to form the pole and the flag, and seeing if the rejection will hold above the 616. If it gets to the 617, then this is a whole new ball game, a whole new conversation must be had. But since it didn't maintain above it, this remained as a level of resistance, even though it slightly did push above it. You know, it did close above it slightly, but not enough for me to be like a cause for concern. No red flags there. So with that being said, once the sell-off began here, clearly it was one that was kind of sharp to the downside, but there was some buying pressure here. There was some buying pressure here as well. But for the most part, the sellers have full control when we take a look at it. It's all about understanding market dynamics and structure. So when we see the stock is forming lower lows, these candles are going lower lows. This specific price level right here, this 613.59, again, another one that activated full understanding that this is going to be a clear rejection, because we saw that the candles, even though this is a bullish candle right here, it meant not too much to me, simply because the next candle that followed it was one that had a stronger body, and we can see how the pressure was to the downside. So I hope that makes sense. And then essentially from there, it's really just about riding the wave. Now, I wish I would have wrote it all the way down so you guys can see this price level here. Let me see if it'll actually... So I went ahead and adjusted the settings on the brightness. So now you can see that this is at the 607.69. Again, I would have loved to have wrote it down here, but I actually got out on this candle here And I got out at this candle here, so it's about 9:10ish. I wouldn't say early because this rejection was good enough for me based upon the fact that I had got enough momentum to the downside, and it played out really well. Again, just understanding dynamics, price action, and trading momentum. Those are the main things to save any trade. Now, if this would have actually reversed, I get a lot of questions about how do you know when to exit the trade based upon it being a reversal. There's always signs, I'll say that. Anytime you're trading it, the market will always show you clues of a reversal. And in this case, again, these price levels that I already had pre-marked, they never had enough momentum to the upside for there to be bullish sentiment in the market. Because there was some bullish sentiment here, it just wasn't enough to push the price above the 617.02. I had really no worries about it being a rejection because it didn't break above my ceiling in this case. Now, I've told y'all several times before, if you have these types of price levels marked on your chart, do your best to keep them on there because the market is super repetitive. It'll come back to these levels again, more than likely. And if it ever does go back to those levels, you'll know to either look for a respect of the level or for it to reject the level. Either or, it's going to play to your favor. So once I saw the rejection of this 616.45, again, just waiting patiently, I wanted it to break the structure of the low. It did. And then, of course, I hopped into it. The 613 mark for me was just like, okay, that's the first take profit to the downside. And then I continued to ride it all the way down. Again, I wish I would have gotten this 607, but that didn't happen. But again, still profitable, still able to maintain a high ROI. So can't be picky about that. Now, I'm always one to make sure that I don't get too greedy in the market, and I know some people have trouble with that. But again, I always tell you, take profit on your way down or your way up, depending on which way you're trading. And in this case, I took profit on the way down. And then, of course, you just let the winners run when they get to the level that you're looking for. Now, again, I should have left some for the 607, but hey, it is what it is. But for the most part, yeah, you just play it based upon what you see. Pre-market will definitely always play to your favor if you can look for any patterns. If they're going to be consistent, the market is always going to tell you what it is. The market will always show its hand. I always say that. So again, if you're trading, always make sure you have your strategy preset. That way you know exactly what you're looking for. Now, I know some of y'all are like, why do you only have volume? I use volume as confirmation. I don't always need to have indicators just simply because I've been trading so long, so I don't necessarily always need an indicator on my chart. I can trade just based upon pure price action. It works for me, so I just continue to do it. But yeah, for the most part, again, I was looking at volume staying steady, which it did, and I didn't have any major downturns as far as like the pullback on volume, so that let me know that's another clue, another signal. But for the most part, I look for my price levels. Supply and demand zones will always reveal themselves, so you never have to guess. So yeah, there's never a need to try to like put together a puzzle. The market is very simplistic, to be honest. So it just takes time. If you're brand new to trading, take the time to read the charts, learn the market, learn behavior and price action. Those are the two main things that are super important. If you can keep that in mind, you'll be totally fine. So yeah, y'all, that was just me showing a quick little recap of a trade. Again, I'm on QQQ. Y'all know I love to trade off the 2-minute. Of course, I was going back between this and the 5-minute as well, but for the most part, I like to trade off the 2-minute just because it decreases the number of fake outs. For me, it just works for me. So yeah, for the most part, that's really it. If y'all do have questions, feel free to leave them in the comment section below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.